Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here today. And as we kick things off, big story today is we've got Nvidia earnings. Unlike most of the S&P 500 that reported over the last, not even the last, but over the back half of April and first week of May, Nvidia always likes to hang out and report about 2 or 3 weeks after the other heavy hitters. And it's been really interesting. It's a fascinating phenomenon the last few years because we've had a few earnings seasons that have come and gone where the S&P has kind of not been looking great, and then Nvidia came in with one of those giant, earnings reports and basically saved the market, and we were off to new all-time highs. The situation here is not quite like that in that, hey, during the earnings season that we've seen, the bulk of it, stocks actually rallied, 4 or 5% during the heart of earnings season this year. And instead, we're on, a little 2-3 day pullback. Nothing big. Maybe we're 2% off the all-time high on the S&P 500. So let's not talk about this being a generational dip or anything like that. But Nvidia's here, in particular, after semiconductor stocks have gone crazy with the semiconductor index rallying about 70% from its March bottom to its May peak. And I think investors are looking to see what Nvidia tells us about the current state of play, since they are still the biggest player in that market.
They are definitely still the biggest player. It seems like the anticipation, as much as this piece in Bloomberg that we kick off the show with does have a headline of Nvidia earnings are set to make or break the chip stock rally. I am, not as concerned about that as I perhaps have been in prior quarters where Nvidia seemed like the end-all be-all of just tremendous focus. But like you said, they are the biggest player, so it is certainly worth covering. But a lot of the gains, like you mentioned, have accrued to some of these other semiconductor companies this year. AMD, Nvidia, Broadcom, and Micron have been some of the just tremendous meteoric risers. In terms of what we're looking for Nvidia for their earnings that will come out at the close of the bell today, estimates are for about $80 billion of revenue around the quarter. You can see 79 in other places. And then for Q2, the one that they're in the midst of at the moment, about $90 billion. And really what the focus is going to continue to be is if Nvidia can continue to beat and raise guidance. Now, the stock trades at a position where it had been trading on average around 36 times forward earnings over the course of the last decade or so. That multiple has come down quite a bit as they've continued to grow their revenue 70+% year over year. We now sit at around 24 times forward revenue. The interesting thing with Nvidia, and Chuck, you and I have spoken about this a little bit before, is there is still this pricing in of 72% revenue growth through 2027. However, that does seem to taper off by estimates to about 34% growth of revenue in 2028. So that is why you sort of see a relative discount on the forward price to earnings ratio of Nvidia to where it's been in the past, is that they do continue to have this just tremendous growth. I think we probably underscore it a little bit how crazy it is to continue to grow your revenue 70% year over year.
I mean, Paul, but hold on, let's just tell people what we've seen. If you go back to before AI was a thing, which you got to go back to Q4 of 22. So their January of 23 earnings report. The trailing 12-month revenue then was $26 billion. Nothing to sneeze at, but that's what it was. Once we clear this report here, their trailing 12-month revenue is going to be around $230, $240 billion. They have 10x'd their revenue in 3 years.
Crazy.
It's insane.
Yeah.
It's absolutely nutty. So, it's not to say that it can't go back down if this all, plays out badly, but I find it hard to actually, no, quite honestly, if Nvidia revenue goes back down to like $26 billion, like something else has gone horribly wrong.
Definitely.
Because the place that I get to, and I continue to get to on this, is look, 5-10 years from now, the world as a whole is going to be using so much more artificial intelligence than it is today.
Mm-hmm.
I don't know who exactly is going to be profitable and exactly how everything's going to work, but given Nvidia's positioning, it's really challenging for me to see them not being a major part of that, even if their revenue may, go through some changes over that time period as the industry evolves.
Yeah, it's not to say that they'll continue to command this, 80+% market share, maybe 90+% market share that they have on these leading edge AI chips. But to your point, I can absolutely see that the demand is going to continue to grow over the course of the next 4 or 5 years. And whether they have 40% market share, 50, who knows how those dynamics play out. But absolutely in agreement with you that they're still going to remain a player in the space. Right now, they are up about 18% year to date heading into this earnings report. That's above the NASDAQ and certainly above the broader market of about 7.4% on the S&P 500. What also we'll be looking for is any sort of information on their China sales. There had been some changes made in January that may have allowed for some revenue. They had projected no realized revenue from sales in China. And then they have their new Vera Rubin chips. Any information that we get on either of those two areas will be of interest at the close of bell today.
The other piece you mentioned, you weren't sure if this really, the headline of Nvidia earnings will be a test, or Nvidia earnings are set to make or break the chip stock rally. The place that we've been seeing the biggest rally in semiconductors for the last, 2-3 months has been in memory chips.
Mm-hmm.
Look, memory is a component that Nvidia buys for its for its products that it puts out to its customers, but that is ultimately where the biggest gains have been in the last month or two. It's been on the memory side of things because there's this shortage of memory that's caused by how explosively the AI business is growing right now. So I'm not entirely sure that NVIDIA's sales for this quarter are necessarily going to be relevant to what's going on in memory. That is a business where you talk to just about anyone who's plugged in, and they tell you, look, there's nothing we can do. Memory chips are basically sold out through the next couple of years, and that's just how it's going to be. The other piece that's interesting when we talk about that then, Paul, is eventually, if something becomes a bottleneck in a process, companies start to look for ways to just avoid it. And the way that I think about it this way, if you are going through something as a household, you're trying to, buy your groceries for the week. I always bring it back to this for you. If you're buying your groceries for the week and you really want to do burgers, but the cost of beef is through the roof, eventually you start just saying, look, we're just not going to buy as much of this. We'll do turkey burgers instead. Mm-hmm. It's the same thing with any business. If there's a part of your business that is denting your profitability because you're having to pay too much for the inputs, you start saying, hey, is there a way that we can structure this so that we don't need as much of that input? And so the concern that I think you do have on the memory side of things is, hey, to this point, this has been the way that things have been done in the AI chip industry. If memory continues to be a bottleneck, eventually the players are going to look at it and say, can we figure out ways to do this with less memory in our setups? Because and this is how innovation happens, by the way. It's through stress. When you can buy the stuff cheaply, you just keep saying, okay, let's buy as much of it as we can. When it becomes expensive, you say, okay, can we make do with less? And that's how you get more efficiency and productivity. It's a good thing overall, but this is also why every single semiconductor cycle ends up in tears for semiconductor investors.
No question.
So that's what we've got there. Let's take a quick break. When we come back, Bond yields continuing to move higher over the last couple days. We'll talk about what's going on there after this.
The Financial Exchange streams every day live on YouTube.
All right, Paul, one of the things that we've seen in the last month or so has been bond yields ticking higher. And this has been kind of interesting to watch because heading into just before the conflict with Iran began, the U.S. 10-year Treasury was at 3.95%. And then over the course of March, as oil prices went up, it went up to around 4.48. And then kind of just chopped around there for like between 4.2 and 4.5 for about a month or so. And then the last 3 or 4 days has just gone zippity-doo-dah to the upside. We're now sitting here at 4.627. We got 4.68 yesterday. And look, it's clear to me that this is, if you look at both the timing and the composition of the move in the 10-year, it is largely driven by inflation expectations moving up while real growth remains consistent. And I want to be clear on that. What we're seeing priced in is not a collapse in real growth and inflation going wild. We are seeing inflation projections moving up as a result of this. But the reason why the 10-year typically moves up in a situation like this is not just because inflation's moving up, but also because growth is strong enough to support that inflation. And I think that's what we're seeing here, not just in the United States, because this is very much not affecting U.S. bonds alone. This is affecting bonds of all major developed countries. The UK, Germany, Japan, Canada. You go down the list, it's happening to all of them. And by the way, you could look at this as a continuation of what we've seen in the last 5 years, which is a re-rating of bonds just based on projected inflation and nominal growth.
Yeah, all those countries that you mentioned, they have a 12-month high on their 30-year bonds. The U.S. here domestically, we hit 5.18% on the U.S. 30-year Treasury. That's the highest since July of 2007. Mortgages on the 30-year fix, we now sit at 6.75. That's the highest since July last year. So yeah, and across the board, rates are coming up. As you mentioned, it's right on the backs of inflation expectations coming up, and off of what, to be clear, is a tremendous earnings season in terms of the numbers that we've seen. I think 91% of the S&P 500 had reported as of last week when I was looking at some info, and we had seen about 27% year-over-year earnings growth. So these are tremendous earnings numbers that we're seeing here. This is the best quarter since I think it's Q4 of 21 in terms of the year-over-year earnings growth. So the growth is there, the demand and everything that we're seeing on the earnings side with companies is strong. To your point, combine that with prices that have increased, that's where you kind of get that cocktail of expectations going up for inflation, and as a result, rates are running up with it. So interesting to see what impact this has. The spring housing market is largely behind us, but just on the broader economy in general, having these slightly higher rates and the change that we've seen, Chuck, in terms of the shorter end of the curve, the Fed fund rate projections from this year have significantly deviated, where we came into January anticipating 2 cuts over the course of this year. Now the most favorable the most highly likely situation is perhaps we do see a raise rather for the rest of the year.
Paul, let's turn now and talk about a couple consumer-facing companies that are reporting earnings this week. We've got Target and Lowe's. Which one do you want to start with?
Let's start with Target. Do you want? I'll just jump in on it. We saw the biggest sales gain for Target in 4 years. However, I am seeing the stock as I go in to talk about how this was a good quarter. It's down 7% in early trading here in the first hour of the day, but overall, in terms of the numbers that we saw here, again, Target had really been bludgeoned over the course of the last few years or so. The stock had just really struggled because post-pandemic, Target really hadn't been able to lure customers in the same way. They were kind of getting their lunch taken by Amazon and Walmart and Costco in terms of the digital sales that plug through those other companies that I just mentioned, and their product mix, got weak and stale. But in terms of what we saw in this most recent quarter, like I mentioned, they saw close to 6% comparable sales growth. That was the biggest since the end of 2021. They raised their revenue guidance to about 4% this year from what was previously 2%, and did see some growth on their digital sales of about 9%. Can
we talk about the digital piece?
Yeah, that's largely off of the same-day delivery program that they've built. Another crazy Target Circle 360 is their Walmart Plus.
Oh, good. That's easy to remember and fun.
That's their little brand.
So I got to be honest. And look, the market kind of agrees with me. After originally being up like 2.5% pre-market on these earnings, it's now down 7%.
Right.
It's because that 9% online sales growth, it really kind of sucks. Is the nice way to put it. Paul, do you know how rapidly Amazon's online retail sales moved in the last quarter?
I know Walmart is closer to 50. I'm going to go with 20% for
13.
Amazon. Okay.
13. And Amazon is as entrenched as you can be in online retail.
Oh, yeah.
If you are Target and you have an online business that is A, just a fraction of Amazon's size, and B, a fraction of your total sales revenue, and the best you can manage is 9% sales growth, you're doing something wrong. It's not a good thing. It's like 9% online sales growth. You look at that and you're like, no, that should be higher. You got to get that in the 20s at a minimum. If Amazon's doing 13...
Walmart's at 27. I want to correct myself there. Yes.
Walmart's at 27? Yep. Fine. Split the difference. You got to get to 20.
Right.
You can't do 9. I'm not saying I could do 9. If you had, Chuck's Retailer, we would do worse. But that's also,
times.
Thank you. I appreciate that, Dean. No, that's not Dean Wormer. That's Animal House. What's the Dean's name or the principal's name in that movie?
I'll look it up.
Keep going. Dean Wormer's Animal House. In any case... It's something where 9%... Rooney. There we go.
Sorry.
It's just something where if you're doing 9% online sales growth, it's not good enough for Target. And so this is the problem that they continue to have, is they are a middling company as far as execution. They just can't really get out of their way. Lowe's, anything interesting there for you, Paul?
Similar trends that we saw with Home Depot. They had pretty disappointing sales growth, only about a 0.5% growth on comparable sales, and they continue to try and build out that pro side of things there as well. A similar strategy that's been deployed by Home Depot. Right now, Home Depot gets about 50% of their revenue from pro contractors, a little bit more resilient business than the regular, mom and pop sort of customer coming in on a weekend basis for their needs. Lowe's is more like 25-30% on that pro side of things. So that's been the dynamics, and a weak housing backdrop has been really what's plagued both Lowe's and Home Depot. So none of them are showing tremendously different results here. Lowe's were down as much as 9.5% this year through Tuesday's close, and then I believe they were off again this morning on some of the news that we saw from this most recent earnings report. Let's see what they're at. Off about 2% today.
Yeah, I think, again, the data that we're getting from a lot of retailers is things are fine. They're not falling apart, but they're not seeing a huge acceleration. Retail is not what's driving the American economy right now.
No.
It is very much
baby.
AI,
Yep.
and retail's fine. It doesn't have to be in the driver's seat. It was for 2-3 years, and it doesn't have to be right now. That's okay as long as it doesn't fall apart, which it's not. Quick break. We've got Wall Street Watch, and Todd Lutzke joins us for Ask Todd next.
Watch, tracking the stocks, the data, and the headlines driving markets so far today. Right here on the Financial Exchange Radio Network.
Markets in positive territory as Wall Street eagerly awaits a significant earnings report from AI and chip giant Nvidia due out after today's closing bell. Right now, the Dow is up 0.7%, S&P 500 also up about 0.7%, NASDAQ up nearly 1% higher, Russell 2000 up 1.4%, 10-year Treasury yield down 4 basis points at 4.62%, and oil down about 3.5%, trading at $100 a barrel. Target beat first quarter street forecast, where the retailer's net sales grew more than 6% year over year in its turnaround effort. Target's same-store sales also climbed 5.6%, its first positive same-store sales number in 5 quarters. However, shares are down by nearly 7%. Another retailer in Lowe's also beat earnings expectations, driven by a strong spring execution, online sales, and strength in appliances and home services. Lowe's CEO did, however, acknowledge a challenging housing environment. Shares are down by about 2%. And Facebook parent Meta began laying off thousands of employees this morning and reassigning thousands others to AI-focused roles. Last month, the company informed its staff that layoffs would impact about 8,000 employees, or about 10% of its workforce. Meta shares are down modestly. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, we're now joined by the one and only Todd Lutzke from the law firm of Cushing & Dolan. This is your opportunity to ask Todd your estate planning questions live on air right now. Phone lines are wide open at 888-205-2263. We can usually get through 2 to 3 calls, so get calling early to get in line because, well, if you're the fourth caller, it's going to be, kind of a toss-up as to whether or not we get to you. Again, 888-205-2263 is the number, and that's what you call to ask Todd your questions live on air right now about your estate plan or lack thereof. Again, 888-205-2263. Mr. Lutzke, how are you doing today?
I am never better. How are you?
Okay.
Yeah?
I was the victim of a robbery yesterday.
Well, it does happen.
Guy stole my camo jacket and flip-flops.
Oh, yeah?
He can hide, but he can't run.
That's true.
So we'll see how it goes. Todd, I want to talk about naming a trustee on trusts. This is something you have to do this, correct? Like, you can't have a trust with no trustee.
That's true. Yeah, absolutely need a trustee.
What kinds of situations have you seen arise where someone's choice of trustee turns out to have been the wrong choice?
Yeah, it definitely happens. I think we need to think about it in terms of 2 trusts, right? Because there's a big spectrum here. If we're talking about a revocable trust, I don't think you have to worry so much, at least not while you're living. So I think your question comes in 2 flavors. 1, what kind of trust do we have? And 2, is the donor of the trust still living or not? Because then it really matters, right?
Yep.
So if you're living and we're doing a revocable trust, while you're alive, you're the trustee and you don't have to worry because you trust yourself. When you die, you could have another trustee serving that you're not around to really fix that problem, and it can be complicated. So what we put in there, if the wrong trustee is there, is we usually have language in that allows the beneficiary of the trust shares to remove and replace, a trustee of their share. Sometimes it's one that's not appointed by the donor. Other times it can just be complete removal and replacement. So it's a drafting issue. If you can put that language in, you can provide the beneficiary the power to remove and replace the trustee over that trustee share if it turns out to be a bad trustee. If you are living and you have an irrevocable, let's say irrevocable Medicaid trust, and quite frankly, sometimes even in an irrevocable gifting trust, if it's an irrevocable Medicaid trust, you might not be trustee, but you're alive, you're the donor.
Okay.
You retain the power to remove and replace that trustee. So if while you're living you see things aren't getting done the way they should be, the trust isn't being followed, or you're not happy with the trustee, you can remove them. And don't need to ask permission. You just send a letter and they're out, and you put in another trustee. So nice control there. Same issue though, when you pass, you're going to have that language in there for removing and replacing those trustees. And perhaps finally, if you have an irrevocable gifting type trust where you're alive and you're just doling out money into this trust to sort of, get it out of your estate, a great way of giving assets to children and grandchildren while you're alive without actually giving it to them. In other words, you're the donor, but not the trustee. Because if these assets are meant to be out of your estate, then you can't be the trustee. Otherwise, you would be retaining the power to control the beneficial enjoyment. They'd be included. So you put someone else on as a trustee, but you also can retain the power to remove and replace that trustee, with the limitation being it can't be someone related or subordinate to you. But at least you have the power to fix that decision as to who you put on as trustee if you find out that they don't work. That's a really complex question, but a great question. I think a lot of people need to know that.
Talking with Todd Lutzke from the law firm of Cushing and Dolan. We've got room on the phone lines for your estate planning questions at 888-205-2263. That number again is 888-205-2263. We're going to take a quick break now, but when we return, we're going to get right to those questions for Todd. Again, that phone number is 888-205-2263. Quick break, your questions with Todd next.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. It's important to update your estate plan as changes occur in your life, or you can wind up with significant issues that may affect your future. Get Cushing & Dolan's new guide called Detour Ahead, Estate Planning Potholes to Avoid. Call 866-848-5699 and get your copy today, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
Again, that is 888-205-2263. Todd, last segment I had asked you a question about, hey, what happens if you pick the wrong trustee, and then you walk through that?
Yeah.
What about what if something happens that causes you to need to update beneficiaries? What tools are available for that when it comes to a trust?
So those also are available. So if you've got like a revocable trust, certainly it's changeable any way you want, right? So if you're alive, you can change it 6 ways to Sunday. There really is no limitation for you on a revocable trust. And I say that because when you switch gears and you say, well, what if I've done like a Medicaid irrevocable trust instead, which many people do that, do they still have the beneficiary or the ability, to change beneficiaries? Well, they do, but it's a little more complicated. So it's generally going to have a limitation. So instead of having something like a general power of appointment, which is the revocable trust, change it any way you want, they've got a limited power of appointment, which means they can change who gets the assets, but they can only do it from the perspective of a defined class that is usually set up when the trust is set up. So it'll say, if I can change it amongst my children, let's say, of all generations. So that would include grandchildren, afterborn grandchildren, etc. You can't add cousin Vinny to the mix after it's set up. But you could still come back and say, you know what, one of my kids is really taking care of me. The other one's sort of had a falling out with, or I want to leave more to a grandchild than to a child. Hey, still certainly okay. You could come in, exercise the power of appointment, and change the beneficiaries to be, the way you want it, and
Sure.
and all that without resetting, the 5-year clock on a waiting period. So you still have great flexibility. The only downside with that is oftentimes you're going to have to do it through your will, and then from there you have to go to probate. But just for the will, you don't have to put any of the assets through. You just have to file the will to execute the change in the trust. So that's how you can change those. And you know what, folks, these questions are great because they're asking me questions about that in my eyes are really potholes that you could run into when you're doing your estate plan, right? What if you got the wrong beneficiary? What if you got the wrong trustee? You know what? More than that, what if you haven't done your planning and you think you want to, not plan? Why? I have a will. Not a good idea. I've got all my assets in a nominee realty trust. I don't need to do planning. Not a good idea. It's kind of a pothole. Well, I own stuff jointly. No, probably not good planning, right? So think about these potholes that could exist when I haven't done my planning yet, right? These are what some of the potholes, right? How do I leave my assets to my kids? Do I leave it outright? Do I not leave it outright? So those are some assets. And again, what if you already did your planning and you're saying, geez, it's been 10, 15 years. I should probably look at it. That's a pothole, right? I'm relocating to another state. Well, does that affect my trust? I just lost my spouse, and now I need to know what to do with my spouse's trust. Do I empty it, put it all in my trust? No. How do I pay the taxes on my now deceased spouse's trust? What if I'm getting divorced? Is that a red flag? Do I need to update my plans? Folks, so many things to think about. Whether you've done your planning, this guide is for you to fix what might need to be fixed. Or if you haven't done your planning, it'll really get you off on the right foot. Call and get the guide. Estate planning potholes to avoid, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com. And you can always go to Cushing Dolan PC, our Instagram page, for even more information.
Todd, when you talk about some of those potholes that people run into with estate planning, specifically we've been talking about trusts and beneficiaries and trustees. Anything else that tends to be a really common one, even through the use of trusts, as someone tries to work through their estate using them? What other trust-related problems do you see quite often?
Well, again, I think one of the bigger problems I see is even if they've already got their trust. This sounds like a question for people who have already set it up. If they've already think they've done their estate planning and they've never funded it, right? I never put any of my assets in the trust. Well, that's a really big problem. So you want to make sure that you actually retitle your assets to the trust so that the trust can do what it's designed to do. But I think some of the other problems I do see a lot is especially for people who have done their planning, right? What if one spouse dies? I think that is a really big one because I can't stress enough, and I tell all my clients, when you've got your plan in place, you got it all funded, it's doing exactly what we want it to do. But when you lose a spouse, that's when you really need to talk to your estate planning attorney, right?
Yeah.
Because don't make the mistake of thinking, oh yeah, I remember now my spouse died and all my spouse's trust assets just come to me. Because they hear that, they think that, but that's not what happens. Now, first of all, the trust doesn't even allow for that, but people do it. They go in, they just take out all the assets and then they put them in all into their own trust. Well, folks, that would completely blow the estate plan, right? Because the goal of the trust on the death of the first spouse is to shelter those assets from being taxed again when the surviving spouse dies. So, by taking them all over there, not only have you violated the terms of the trust, but you've put them all back in the survivor's estate, so it's going to be, just increased and causing probably more estate taxes due on the second death than would otherwise be the case. And one last thing to think about when you lose a spouse is not only do you need to update your own estate plan a little bit as a single person, but the trust that exists, as long as you haven't emptied it, you got to figure out, how do I file income tax returns for this trust now? Because if it was revocable when the spouse was alive, it's now irrevocable, and it's going to have buckets in it. You're going to have to get ID numbers and figure out, what kind of income tax returns need to be filed for those trusts every year. So So those are some really big potholes or problems that you could run into.
How complicated is that process of, of getting those new trusts set up that are irrevocable after a spouse dies? What does that actually look like in terms of like the blocking and tackling that someone needs to do there?
So by the time hiring the lawyer is probably half the battle. Just go back to your estate planning attorney and they'll walk you through it. It's a lot of paperwork is what it comes down to. Is like, we would then say, okay, so let's say spouse dies and there is now a remainder share and a marital share. So it'd be like the Lutsky Family Trust FBO remainder share, Lutsky Family Trust FBO, special marital share or Q-tip share. So that would be the new language on, let's say, a brokerage account or a bank account, right? You retitle those that were in what was before called the Lutsky Family Trust to now say Lutsky Family Trust, remainder share, Lutsky Family Trust special marital share. And it's simple. That's just a retitling of the asset. Then got to go get ID numbers. So they're going to need tax ID numbers for those buckets because when it was a revocable trust, you weren't even filing an income tax return. You just set it and forget it, live your life very unaffected by the trust, if you will. So now you need to file tax returns. Now, the good news is they're probably going to be simple trust tax returns. I use the word simple not because they're simple to prepare, but because that's the kind of trust it is. The language in these buckets might say something like the trustee shall pay the income to the spouse. If it says that, then it's a simple trust because it's required to pay the income. But from an income tax filing standpoint, when you file the 1041, even if you don't distribute out the money, which is important because a lot of times clients just say, look, I'm just going to be leaving it there. I don't want to change my life. I'm just going to let it invest and grow. And so even if they don't physically distribute the money out, the language shall pay means that it's going to be picked up on your personal income tax return anyway. Good. And it does not cause you, any income tax problems because it's in one of these irrevocable trusts. So lots to think about. That's why you need the guide.
Mr. Lutsky, thanks so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
Still a bunch to come as we head towards hour 2 of the show. We'll recap what we've seen for the Q1 earnings season. We're talking SpaceX's IPO. We got a little bit more information on that yesterday. We'll talk about what we're seeing from the U.S. oil and energy markets. A little bit of a look at what's going on in housing and specifically the mortgage market.
Is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you. And to kick things off today, investors feeling in a pretty good mood here with all the major indices rallying. The S&P 500 up 53 points, about 0.75%. Dow is up 366 points, about 0.75%. NASDAQ Composite up 273 points, about 1%. And that cute little Russell 2000. Here, boy, there you go. Okay, go fetch. Yeah, you're up about 49 points, or almost 2% there. So all major U.S. indices are in the green. 10-year Treasury also coming back in as well. It is now down 7 basis points to 4.603. This all happening basically since about 10:15 or so, when some headlines came out that maybe generated some optimism around a U.S. and Iran deal. Reportedly, and again, this is like, I don't even know the original sourcing on this, so I take it with like a lot of salt, not just a grain. But there are like various reports out there that are saying that the Pakistani army chief may head to Iran tomorrow to present a final version of a deal. I don't know what to make of any of this. Again, I'm hopeful that you get something moving through the Strait of Hormuz in large quantities. To this point, we're not seeing that, even as you still get kind of this drip drab of little ships, not little, a lot of them are rather quite big, this drip drab of ships coming out of the region. It's just not enough to actually change the calculus there. But the 10-year Treasury down 7 basis points, again to around 4.6%. We've got the dollar down 0.2% to 99.07, and gold up 26.50 an ounce to 45.37. Crude oil, West Texas Intermediate, also selling off on that news I mentioned earlier, down 3.82 a barrel to 133 cents. AAA national average for gas prices up 2.2 cents a gallon to 4.55 and 5/10. Diesel also ticking up a couple tenths of a cent to 5.65 and 2/10 as well. So that's what we've got moving in markets here. Paul, we got a piece from Barron's. Why end of earnings season leaves the stock market vulnerable. Does it?
We've had a really great earnings season for the course of the last few weeks here. We've got a significant percentage of the S&P 500 companies that have presented their earnings, and we've seen an average growth rate of about 28%, the highest since 2021, according to FactSet. The reason that there is some potential concerns regarding the end of earnings season, not specific necessarily to anything about the company's reporting earnings, but the larger macroeconomic backdrop that you were just mentioning between the U.S. and Iran war. We talked a little bit earlier in the program about the 30-year Treasury has hit its highest level since July of 2007, sitting around 5.15%, and the concerns for future inflationary impacts heading into later this year as we sit with gas, still well over $4 a gallon. So it's these two different paradigms going on right now in the market. A great earnings season where there continues to be a lot of momentum for these chip companies that we talked about, and some good earnings growth. Even outside of the tech sector, we've seen some pretty good earnings growth in other sectors of business, but you do have the risks that loom out there with the inflationary pressure that we're seeing. So
I think that when we look at the next year or two for earnings, because again, trying to predict what one earnings quarter is going to be, I don't get interested in that. It's not it's not what matters for the market. I think that the piece that's interesting to me is you've got these crosswinds that are in markets right now where you've got this strong AI capex cycle that's going on. Mm-hmm. You've also got, in the last couple months, a labor market that's showing some signs of life. After kind of looking very not great for the second half of 2025, the last couple months we're starting to see a little bit of perking up there. And I guess the question that is really out there in my mind is, hey, given the disruptions that we know are coming, that are already hitting in large parts of the world because of the closure of the Strait of Hormuz, does this, A, disrupt that capex cycle in any way? Because a lot of those components are imported from places that, quite honestly, do not produce a whole lot of energy themselves and need to import a lot of it. Mm-hmm. And the other piece is this nascent hiring cycle. Does it get short-circuited because other input costs are going up and so companies can't hire the number of heads they want to? Those are the pieces that are interesting to me for the next couple of years. Like, what happens to stocks in the next month or so? It's going to be more dependent on those things than, like, anything else, in my opinion.
Sure.
So that's kind of, again, just kind of broadly what I'm looking at right now, the two big things there. Another big one coming down the road, though, Goldman Sachs picked to lead SpaceX's IPO, and you've got, again, this is not one that's just picked up by, one investment bank, given the size of it. You got Morgan Stanley signing on, Bank of America, Citigroup, JP Morgan, Chase. So all the big guys are getting their bite at this one. And the piece that I'll come back to, it's not to say that SpaceX is or isn't going to be a failure. I don't know how they're going to do. They might do great. They might do terribly. My understanding of, orbital mechanics and things like that, probably better than the average person, but not nearly enough to be able to make an informed decision. Here's what I can tell you, though, and it's not even a valuation thing, like in terms of like price to earnings or this and that. People look at Tesla and they see, oh, here's like the story in Tesla. Look at how much money you could have made. And I said this the other day. But Tesla IPO'd at a market cap of around $2 billion. Mm-hmm. It's trading at 1.5 billion. No, hang on. 1.5 trillion right now. So you do the math, and you say, okay, that's a 750x, move. If SpaceX is going to IPO at $2 trillion, again, just, a couple trillion amongst friends, you're talking about, in order for a similar move to happen, it's got to become a $1.5 quadrillion company. We don't even talk about quadrillions because they don't exist. I mean, they do, but not in terms of dollars.
Sure.
So, I'm not saying that SpaceX will or won't be a great stock, but in order for it to 750x like Tesla did after IPOing, it has to get to a point. Remember, $1.5 quadrillion. The world economy is anywhere around, what are we talking? It's like 100 trillion, somewhere in that ballpark, Paul, I think, maybe like 110.
Yeah, these numbers are beyond what I have in my back pocket. I'll take your word for it.
You've got to have, like, in order for Tesla to become, SpaceX to have the same kind of move that Tesla did after going public, it has to become like 15 times world GDP.
Right.
That's all I'm saying.
Yeah, I think...
don't think that that SpaceX is going to be Tesla in terms of long-term performance.
Yeah, I think the other way to cut at this subject is this company has stayed private it was founded before Facebook. Most listeners may not even believe in 2002. It's been in the private markets for almost 25 years, and some of the growth that you've seen from a compound basis on the valuation to reach the $2 trillion that they're seeking, you're talking about over a period of time. I had listened to something on the way, and 30% annualized growth for a period of time. I forget what time frame that is, but to your point, Chuck, a lot of the valuation gains have come in the back half of these last 5-6 years, as there's been just a tremendous amount of demand and enthusiasm regarding space travel. So I think all of those things are just important context for listeners to have. There's going to be just substantial demand for this IPO. I think from a buzz standpoint, Chuck, we were talking about this with Mike yesterday, probably the biggest since Facebook in terms of just, general retail investor interest out there. Numerically, it's absolutely the biggest, since Saudi Aramco in terms of the amount of money that they're raising. But all of these things regarding how long they've stayed private, their valuation, and what you just alluded to in terms of projected future growth, comparing that to Tesla, all these things are just to be aware of. Not to say that they couldn't have tremendous performance, but it is something that investors should research before June 12th, I think, is what they're targeting for that IPO date.
Let's take a quick break. When we come back, I do want to talk about some of the weekly oil data that we got this morning, and then also we've got some trivia next.
Market insight, retirement strategies, real talk about Wall Street and economic trends. Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Nearly 400 runners have already registered for this year's DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day in 1927, Charles Lindbergh took off from New York to cross the Atlantic for Paris in the first solo nonstop transatlantic flight. So our trivia question today, what was the name of the plane Charles Lindbergh flew in the first solo flight across the Atlantic? Once again, what was the name of the plane Charles Lindbergh flew in the first solo flight across the Atlantic? Be the fourth person to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
It's a great question. One of my, I really want to text in like 3 times, but I won't. Paul, I want to talk a little bit about what we got from the U.S. Energy Information Administration this morning. Every week, every Wednesday at 10:30, they come out with what they call their weekly petroleum status report. And it shows, basically how oil and crude oil and refined products have moved around the country and, different levels and this and that. And here's what we saw is the commercial crude oil stocks dropped by 7.9 million barrels for the week ending 5/15. The Strategic Petroleum Reserve dropped by 9.9. You combine those two, it makes 17.8 million barrels as the draw for the week. That is the largest ever weekly draw on record. The previous high was around 17 million barrels, and that was after a hurricane back in 2023, I believe. And I've been saying, for the last 2-3 weeks that this is coming, and now it's showing up in force, where you're seeing these significant draws. The place that you are today is that if draws continue at the pace they have for the last few weeks, commercial crude oil stocks are going to get to the point where you're at minimum operational inventory levels. Probably sometime as we get closer, like you can hone in on this a little bit more, it's looking sometime in late July to mid-August at this pace here. The Strategic Reserve probably gets to minimum operational levels somewhere in the ballpark of late August to mid-September, so maybe a month or so longer than that. But I've been saying for a while, there's basically nothing that you can do to change this. It's something where, because the oil that is in the Middle East is at a reduced flow out of the ground, you've got a 12.5 million barrel per day gap that you're trying to fill, and this is one of the ways that flow is being replaced is through drawing down onshore inventories. And there's not really anything that you can do about this. Outside of California in the United States, I really doubt you're going to see any kind of shortages. But even if you get some kind of announcement that initially drives the price of crude down, as there's some excitement about a Hormuz reopening. If we get that happening, the cake is kind of baked on this, in that there's basically no way to avoid these minimum operational inventory levels because of the transit times required to actually get stuff from point A to point B. And we've passed the point of no return on it. I had highlighted Cinco de Mayo as kind of that line in the sand, and it was crossed 2 weeks ago. So we just saw here. This is data from the EIA and the U.S. government saying, "Yep, we just had the single largest weekly draw on U.S. Crude inventories ever." And you're probably going to be seeing, several weeks of draws in this fashion before they probably start to slow down a little bit, just because you're not actually going to get to minimum operational inventory levels. The key is to stop just above that. And so this is probably the place that we're, operating in for the next 3 to 4 weeks. And then in late June, you start to see a little bit of a tapering in terms of that flow, most likely. But this is where we're heading. The cake's baked. The only question is, how long do we spend at those minimum levels? And that's a function of, hey, when does Hormuz reopen with adequate volume of ships going through? I do know, this was just now, according to a pool report, President Trump did indicate that he believed that negotiations with Iran were entering the final stages. What that means and, what we actually get is an open question. Again, we've had a number of false starts over the last month or so as it relates to these negotiations. And so I don't know what we're actually going to be getting out of this, if anything tangible comes of it or if not. But we'll continue to watch the situation and see how it evolves here.
And continues to reinforce this idea that obviously on headline inflation numbers that we'll get on the backs of the information that you just relayed, that we're looking at some pretty high prints throughout the course of the second half of the year here, with energy prices at the levels that we're discussing.
Yeah. So this also, by the way, has now taken crude oil down, West Texas Intermediate down another $3 per barrel to $97.51. So I have gotten some questions from people like, hey, if stuff's actually that bad, why is crude, trading the way that it is? And part of my answer is, look, do you want to step in front of that volatility every time there's a headline? Mm-hmm. The easy money to be made was when crude went from 55 to 110. At this point, do you want to be playing in these choppy markets where things are swinging, 5-6% on a daily basis potentially? That's not really a whole lot of fun. The fun was, hey, if you can buy crude oil or energy stocks in January and sell them in April, okay, great. That's the fun part. None of this is fun when you're dealing with a conflict like this. But from an investment perspective, that's a much cleaner situation to enter than one where you have no idea what's actually happening day-to-day in negotiations, and headlines are moving things 5% in either direction, depending on which way the wind's blowing. Let's take a quick break here. When we return, trivia answer, Wall Street Watch, and we're talking mortgages.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. For Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today. Right here on the Financial Exchange Radio Network.
Well, markets are now seeing a broad-based rally as traders brace for a significant earnings report from Nvidia due out after today's close. Fed meeting minutes from Jerome Powell's final meeting as Fed chairman will also be posted at 2 o'clock. Right now, the Dow is up nearly 0.9%. S&P 500 up 63 points, also about 0.9%. NASDAQ up 1.25% or 326 points. Russell 2000 now up 2.3%. 10-year Treasury yield down 8 basis points at 4.58%. And oil down 5% now, trading right around $99 a barrel. Target beat first quarter street forecast, where the retailer's net sales grew more than 6% year over year in its turnaround effort. Target same-store sales also climbed 5.6%, its first positive same-store sales number in 5 quarters. However, the stock is pulling back over 4%. Lowe's also beat earnings expectations for the first quarter, driven by a strong spring execution, online sales, and strength in appliances and home services. Lowe's CEO did, however, acknowledge a challenging housing environment. Lowe's is down slightly. And Facebook parent Meta began laying off thousands of employees this morning and reassigning thousands of others to AI-focused roles. Last month, the company informed its staff that layoffs would impact about 8,000 employees, or about 10% of its workforce. Meta shares are up by about 0.5%. I'm Tucker Silva, and that is Wall Street Watch. On the previous segment, we asked you the trivia question. What was the name of the plane Charles Lindbergh flew in the first solo flight across the Atlantic? That would be the Spirit of St. Louis. And Joe in Sandwich, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Joe. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
By the way, if anyone is ever looking for a great book to read, Bill Bryson's One Summer, America 1927, is right up there with one of my favorites. It covers, again, because all this was going on in 1927, it's got Lindbergh's flight, the Great Mississippi Flood of 1927, the 1927 New York Yankees, Ford moving from the Model T to the Model A, the Jess Wheeler Jack Dempsey boxing match, and so just a fantastic look at kind of pre-Depression America, and some really cool things that you can read about if you're interested in that kind of thing. U.S. mortgage rates rose last week to an almost 2-month high. Paul, what are we seeing here?
We are seeing that in most recent data from Mortgage Daily News that we're at 6.75% on the 30-year fixed mortgage. This is off the backs of the U.S. 10-year Treasury spike that we've seen over the course of the last month, 30 to 40 days or so, though the 10-year is down a pretty significant amount today, down about 8 or 9 basis points at close to 4.58%. Yields have spiked with some of the concerns regarding inflation, and that has impacted what we've seen on the mortgage side of things in what has been another pretty tepid year in terms of housing market activity. And there was some hope heading into this spring housing season that we'd be sitting with mortgages in the fives. Obviously, since late February, that has not been in the picture at all. So it'll be interesting to see what we get out of the housing market for this year with mortgages at these rates.
The interesting thing is that pending sales have actually been ticking up the last couple weeks in terms of some of the data that we're seeing on that side. So I'm trying to reconcile. Yeah, again, like you hear all this stuff, and again, it's not to say that like this is inherently good or bad, but like you get all of the stuff about, hey, Americans are concerned about, higher gas prices. They're concerned about losing jobs to AI. They're concerned about, this, that, and whatever. And then I look at, the pending home sales data for the last few weeks, and I'm like, oh, like it's moving up. It's moving ahead of where we were last year. And I keep coming back to stop paying attention to what Americans tell you about the economy.
Yes.
Start paying attention to what they do. And what they are doing is continuing to spend money. That may or may not change at some point. Like we might get to a point with gas prices or this and that where, hey, we finally run into, that problem. But I got to tell you, if all you do is look at all the sentiment surveys and they're like, well, Americans feel bad about this, and I'm not telling you that you should or shouldn't feel bad about this. Like you can feel however you want to about the economy. What I'm telling you is when you look at how Americans are spending, there is a big divergence between what they're saying and what they're doing.
No question. And really has rung true for the last couple of years, Chuck, that there's been all sorts of global macroeconomic potential concerns, but people have kept chugging along.
I've talked about it. I think these sentiment surveys are broken at this point. It's when you're getting
worse readings than 08.
When you're getting people saying that the economy is worse now than 2008. I'm telling you, like if you took a Gen Zer right now, who was born in 2008, by the way, if you took a Gen Zer and Tucker, can you get the time machine fired up?
Stand by.
I need 18 years of power, if you could. If you took a Gen Zer and took him back to 2008 and had him watch the financial crisis and then like the 2-year aftermath where unemployment was still near 10%, for a couple of years, they would be crying to come back to 2026. They would be crying to. So it's not to say that this economy is perfect right now. It is not. Like, there's some very real problems. But to be like, oh, it's like, Americans are saying the economy's worse than '08. Guys, I got to tell you, I lived through both of them. '08 was worse. And it's not even close. It's not even close. 2008, you had companies were just like trying to figure out, like, can I sell anything to anyone?
Yeah.
Like, is there anyone who can buy my product that still has money?
Deflationary pressures out there. Yeah, it was.
It was really, really gnarly, and this is not that.
They're pulling a lot of Debbie Downers, it seems like, in those sentiment surveys.
I look. I'm not saying that things are easy for families right now, but the fact that people are saying in the aggregate, "Hey, this is worse than '08." It's not. Objectively, it's not. So that's what's going on. Folks, if you are a person, and I hope you are, and if you have a bunch of investment accounts or bank accounts out there, and you're like, hey, what do I do with all these things? Armstrong Advisory Group has a new guide on this very topic. It's titled Consolidating Investment Accounts. And specifically, it goes through when it makes sense to consolidate, but also when it makes sense to not. Because, yes, consolidation is great in that it streamlines, it makes it easier to manage, you don't have to worry about losing, different tax reports each year or, losing track of where your funds are. But sometimes, certain accounts that you have might have either investments in them that you can't access in other places, they might have services that are significantly discounted, they might have things that make you want to keep them and not necessarily consolidate. So you have to actually think through the process and figure out, hey, which of these can I consolidate and which do I need to keep right where they are? The guide is titled Consolidating Investment Accounts, and there are two ways that you can request it. The first is by calling 800-393-4001. That number again is 800-393-4001. The second way, you can go to armstrongadvisory.com, click on the button to download the latest guide, and you can request it right there. Again, that phone number is 800-393-4001, and the guide is Consolidating Investment Accounts.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, one of the things that we're seeing as a result of, higher housing costs and higher mortgage rates, the rise of non-conforming mortgages coming back. Non-conforming does not necessarily mean that things are going to fall apart or that they are necessarily riskier, but it simply means that, hey, when you look at mortgages that can be packaged up and securitized into, different bundles to be sold out to different buyers, non-conforming loans, they don't conform to what those, standards are, and so they can't be packaged and sold as easily, which you can make a case, in some cases, might make them safer if the lender is actually willing to hold on to the risk.
Yeah, just to understand for listeners out there, the non-conforming loans typically will allow for a greater ability for people to borrow who have sort of unconventional income situations where they might not be the traditional W-2 employee, they may be self-employed or hold a lot of their wealth in real estate, and their tax return doesn't really indicate the income that they generate. And so to take on this risk, the lenders will assign a higher interest rate on the mortgage and also will be a little bit more flexible than your typical conforming loans, which the government will back and guarantee. Like you mentioned, the non-conforming ones, they're not going to. Again, this is 6% of home loan originations in 2025, so you're not talking about a big piece of the pie. But what's happened with these mortgage companies from a lending perspective is appetite has been much slower than it was in the refinancing boom of 2020 and 2021. So they have to find new ways to build in growth, and this is one of the ways that they've explored.
Let's take a quick break. When we come back, it is time for Stack Roulette.
From markets to money to business and financial news, watch the Financial Exchange every 1385 with your comments and questions about today's show. And let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Remember, you can watch the show live every day on our YouTube page. Well, breaking business news and all of our content is also archived. So if you want to go back and see a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Paul, what do you got for me for Stack Roulette?
How Google is starting to win the AI race. This is a piece here from the New York Times. About 2 years ago, it really looked like that Google was in trouble. ChatGPT had exploded in terms of its popularity by created by OpenAI, and it felt as if Google, who had really been at the forefront of AI development dating back 10 or 15 years in terms of the research and the DeepMind lab that they had, was kind of caught flat-footed with not the ability to respond to this looming threat on the search side of things with a chatbot. Here we sit 2 years later, and Google had its investor conference on Tuesday. They now have more than 900 million users of Gemini, which is right around where OpenAI's self-reported number of active users for ChatGPT is, and it's 30 times where Anthropic's Claude sits. And they've been able to weave in that business into Gmail, Gemini that is, into Gmail and some of its other products. Come January, the iPhone is going to be using Gemini to power its future version of Siri. So just an amazing sort of, I won't call it a strategic pivot, that's probably the wrong phrasing, but catch-up effort that has been made by Google to fend off something that would have been quite detrimental and a existential risk to its business model. It appears it's really taken that and made it a strength of their business. So it's just been continually interesting to follow. We've seen how technology evolves over time. Microsoft is a good example of a company that missed the ball with mobile back 15 years ago, and Google was sitting at a similar precipice, but clearly has fought back quite nicely here over the last few years.
Let's see. I want to discuss... Not really enthused by this story about Jeep, but I guess that makes a bunch of people, because here's the deal. Jeep sales have been sliding for the last 6 years. They've gone from selling around 973,000 vehicles in the U.S. back in 2018 down to around 593,000 today. And this is not great. Like, you don't want to see your sales decline by 40% over a 6-year period. And, the parent company for them, Stellantis, is trying to figure out, can we, make anything out of the Jeep brand right now? And I just think it's a very crowded space that they operate in. Like, everyone is trying to make SUVs now because that is the dominant body type in North America, and so everyone is competing in the same space, and it's just one where it's unclear that they have anything that they deliver that meets kind of what the mass market appeal is asking for right now. It's not to say that they don't have good products. I'm not saying that, but what I am saying is that the Jeep brand has traditionally been, hey, we've got, solid, off-road prowess and something, in a body style that still works, for on-road driving. And it's just unclear that is selling right now in any unique way relative to all the other products that are on the market.
Yeah, the dealer's feedback is that the Jeep Cherokee is priced too high and that Stellantis needs to be a little bit more generous with incentives in order to meet some of the growth targets from this Bloomberg piece here. That's cited as one of the issues. Like you said, to have a 6-year sales decline is just really dismal from a car company perspective. There are so many other people, auto manufacturers at the table here trying to compete with them. They still have a great brand. I think to your point, where a lot of people who drive Jeeps love the car and will continue to buy them, but it just doesn't seem like they're able to do nearly as well as some of the competitors that they're up against in this SUV space, which is so competitive. And they're trying to come out with a hybrid, which I don't know how successful that is going to be in terms of that effort there.
We'll just have to see where things go. What else you got for me, Paul?
A Texas man was arrested after intentionally driving his Cybertruck into the lake to test quote-unquote Wade mode. So this reminds me very reminiscent of, I guess Michael Scott wasn't trying to test Wade mode. The GPS betrayed him in that Office episode where he drove directly into the lake. But the officers in Grapevine, Texas, not as sensitive to Tesla's Cybertruck Wade mode for this individual here, as he was put into cuffs after trying to see how this Wade mode fared out, which doesn't look too well by the picture that I'm seeing here of this Cybertruck. These are expensive cars, man, to run that.
Right, the thing's like $100,000.
That's like $100,000 that you just drove.
Let's take it in the water, see what happens.
The water there.
What could go wrong?
You imagine that there might have to be some substances consumed to take on that type of endeavor, or he's just got a lot of money that he's willing to literally throw into the water.
I would imagine you can't file an insurance claim for this, correct?
I don't think so. This seems to be negligent driving, right?
Oh, yeah.
Yeah.
I don't
I
know
guess
how
it is in the owner's manual. According to Tesla's Cybertruck manual, the feature allows Cybertrucks to enter and drive through bodies of water such as rivers or creeks.
Not that deep.
Yeah, I'm looking at it. It says you can go up to 32 inches in. This thing, the whole back is underwater.
Yeah. You can go through rain puddles.
Details.
You know? It's like, if I could jump, I can fly, right? No, like, jumping is different from flying. We're going to take a break for the rest of the day, but we're going to have another show tomorrow.